ladies and gentlemen. Welcome to taxation. We would like to look at LO3, employment income. Now, we want to look at how we are going to calculate the tax of an employee. Now, basically when we're looking at employment income, we're saying that an employee who gets a salary of more than 36,000, remember the threshold is 36,000, anything 36,000 and below per annum, they do not pay taxes. Now, above 36,000, there is percentage in which each employee is going to pay their taxes. Now, there is a straightforward calculation of how to do that. We'll get into that one later. We'll do an example together. Now, besides the salary, now, if we're looking at employment income, we're saying this includes salary, bonuses, any benefits or advantage that accrues in the course of employment, whether in cash or in kind. Any traveling, entertainment, or other allowance not used for the purpose of employment should be taxed. Any amount accrued in commutation of monies due under an employment contract, for example, leave pay, must be taxed. Okay. Now, all those other cash amounts that have accrued or that the employee has received should be taxed. Now, there are other things which are not cash, but which are benefits in kind. They should also be taxed. Now, looking at housing benefit, car benefit, whether it's school fees, if the employer sends the employee's child to school, that is a benefit that also needs to be taxed. So now we want to look at benefits in kind. Now, these are non-cash benefits or advantages granted to an employee by an employer, and therefore specific rules are given in the Act to determine the chargeable amount of a benefit. Now, if we're looking at the first one, which is the housing benefit, how do we calculate housing benefits? Now, we're going to look at 10% of the rateable value of the house. Now, you look at the market value of the house, and then you calculate 10% of that. That is going to be our taxable amount. However, the housing benefit, it can be reduced if the house was not available for the whole year, and where the employee pays rent or makes a contribution towards his or her accommodation. Another benefit is car benefits. That one is very common. Now, if an employee is provided with a company car, we are going to look at the cost or how much the company cost. If it was, for example, if you're looking at if a car was bought for, say, 100,000, the employee's benefit would be 5,000. Therefore, 5,000 is going to be the taxable amount. However, if the employee paid for his own fuel, we are going to deduct 2,000, which is the fuel cost adjustment. Are we together? So therefore, if he bought a car, or rather if he's using a company car which was bought for 100,000 and is paying for his own fuel, the benefit is going to be 5,000 less 2,000 for the fuel cost adjustment. Therefore, the taxable amount there would therefore be 3,000 pula. Now, other benefits, we have furniture benefits. This is where an employee enters into, say, a company house which is fully furnished. Now, in such a case, you would want to calculate the cost of the furniture. Now, you are going to calculate the benefit is going to be 10% in excess of 15,000. So, for example, if if you're looking at furniture which costs 60,000, you are going to say 60,000 pula minus 15,000 pula, which would give us 45,000 pula, and then we calculate 10% of that, which is 4,500 pula. That is going to be the taxable benefit. Now, there are other benefits, of course, such as water, telephone. If the employer paid a telephone bill, that bill is going to be taxable. Okay. In our calculation of taxes, there are what we call allowable deductions. Now, what we're going to do is we're going to add all the benefits and come up with the total gross amount. And then you are then allowed to deduct what we call allowable deductions, or things that are going to reduce your taxes. This can be, for example, approved superannuation funds. They are allowed to be deducted. We are going to do an exercise together, and then we're going to calculate this. Now, there are what we call exemptions. Exemptions, these are benefits that are not taxed. For example, medical aid paid for by the employer is a benefit. However, it is exempt from tax. Interest, which is paid by the Botswana Savings Bank to a taxpayer, is exempt from tax. So these are some of the things which you are not taxed on. Now, the other thing we would like to look at is reliefs. Now, it does happen so often that a business can incur losses. However, if it does incur losses, it means it will not pay tax in that particular year. It can then carry forward the losses into the future years, up to a maximum of 5 years. Okay. Now, from here, we would want to determine the gross income, the taxable income and the tax payable. Now, the gross income, this would be defined as the total amount, whether in cash or otherwise, which is accrued or is deemed to have accrued to a person from each separate source situated or deemed to be situated in Botswana during the tax year. Now, this gross income does not include amounts of a capital nature. And then from the gross income, we are going to deduct any exempt amount in order to arrive at the assessable income. Amounts exempted include interest payable on the Botswana Savings Bank, bonds and certificates, war pensions, gratuities, interest on subscription shares paid by Botswana Building Society. Now, we would like to look at this question. John P. Now, John is employed by a local company as a branch manager. And then during the year assessed ended 30 June 2012, he received a monthly salary of 20,000 pula. Now, in addition to that, the following benefits were afforded to him by the company. He had a company car. He used a company house, company furniture. The company paid school fees for John. He was also given entertainment allowance. interest from Botswana Savings Bank, interest from Barclays Bank amounting to 8,000, and then he contributed 20,000 to an approved superannuation fund. And therefore the question goes, calculate John's taxable income and tax payable. And then there's also question 2, which we would like to look at, where we are supposed to calculate the taxable income and tax payable for the year ended 30 June 2012. Try these exercises and send them to me so that I can correct you where you make mistakes.